Welcome back, everyone. This is the London session on TopstepTV. Hope everybody had a good break for Thanksgiving. So we're going to see what we have going on today. iShort Future says, I don't get these lives when London has been open for an hour and a half. The reason for that is because I don't trade the open. I think you don't have enough, like the London Open is not like the New York Open. Nothing major happens there, right? It doesn't start going insane. It doesn't start going crazy. In fact, the only thing that you can do there is just to do a scalp. I'm not a scalper. I look for larger opportunities. Those are not going to appear at the beginning of the session. So let's do a little roll call, see who is around. We have Dan Trader, Lido, Alan, obviously our lovely moderator Bruno. Let me just do the full screen here. And we have Chris, Sivan, Wes is here, Teo. Right, so we have some regulars. That's always good to see. So whoever is wondering, oh, why does she start 90 minutes into it? It's because of the way I trade, right? I look for the failed auctions or sustained auctions, and in order to get those, I have to wait until at least an hour has gone by, but very frequently for London, an hour and a half, sometimes 2 hours, 2.5 hours. So that is the reason why we start these a little bit later. There is no point jumping in and then getting a whole bunch of paper cuts, trying to get some big move during London. That won't happen on most days. So London session is a very different session from the New York session. And this is why. Now, if you're here for the first time, you have no idea what's going on and who I am. I've been trading for 17 years. 12 years out of that, I've been trading futures. And I specialize in metals and energies markets. I'm also currently holding an active Series 3 license. Okay. Let's have a look at what is going on. Manfred wants to know, can you once explain what a failed auction is and how you can see it? Failed auction will happen only once we finish the first hour. So in this case, let's have a look at when we started. This is a 30-minute chart here on crude oil. So this was the 8 o'clock candle. This is 8:30. Now there are little details that you have to make sure exist on the day. So this was your whole initial balance. So this candle here and that one there. I'm going to put an initial balance high and low to delineate those a little bit differently. So let me see if I can do it maybe like with the white, because that is pretty obvious then. Now, obviously I have a charting package on the other screen and they are working on the TPOs for Topstep X. But until then, let's do this. So this is your initial balance low. Keep doing this. Let's make this white as well. And this is your initial balance high. Now, when it comes to any sort of auction theory stuff, you don't necessarily have to wait until the full failure of the 30 minutes. But basically, the premise of a failed auction is that once you leave the initial balance, the first hour of trading, once the price starts struggling outside of it, so they try to pop outside of it, they try to find business there, and ultimately they fail, so there's no momentum, and it's a fake out. So they return to the initial balance. And who are they? The wizards, the people that move the markets that have bigger pockets than we do. They generally have much more an effect on price due to the position sizes that they're trading. So that is who we want to be following, not, your mate Dave down the road, or you, me, even Dakota. We don't have enough buying power of that sort to truly move the markets, right? And even though in some very thin markets you might have an effect on it, it's not going to be enough. So what do we want to see for a failed auction? That the price attempts to leave the first hour trading and then effectively returns to it, closing the 30-minute time frame back inside it. Now, it doesn't mean that you have to wait for all of that to happen. However, on a lot of the days, you may have another good level to fall back on where that hypothesis can be observed even well before the actual 30-minute time frame fails back into the initial balance. And that's to do with time. So if the price starts spending time back inside initial balance, you can kind of front run that trade idea. But almost always, in order for that to be a very good trade, you need to have something else to fall back on. But yeah, the basic premise, it tries to get outside of the 30-minute initial balance taken for the first hour of trading. We call those the TPOs, so time price opportunities. But it's basically the same thing. You're looking for the 30-minute time frame to fail the auction effectively. If the auction is successful and if they find business, you will see them spending time outside of the initial balance. So what is happening right now? Well, nothing really. We're still inside the initial balance. There hasn't even been an attempt of crude oil to exit. Now, another thing that you will notice on my chart here is that there are a lot of levels here. First of all, we're opening inside value, and it's just flat. Initial balance has been set. We've established it. It's going nowhere, just sideways. We have some options-related levels and the value area from the previous day's trading from Friday. And it was actually a pretty lively session. I did do a short from 69.45 on a Friday. If you watched myself and Anne-Marie on the Mentor Q webinar on Friday, we did run through that trade, but that was effectively the failed auction trade. It is by far my most successful trade, but there are a couple of things you need to know about that particular setup. So why don't we talk about it? Well, first and foremost, we have to have enough of the initial balance size in order to run it, right? But you don't want it too small and you don't want it massive either. You need to have a normal initial balance range. And for crude oil, for London, that tends to be somewhere around about 60 ticks. We are currently below that metric. We're 47 ticks wide. So for me, even if we get the failed auction, that would mean that the profit margin on that is still somewhat in the scalp territory. Now, the reason why I don't like doing scalps is because I've traded for so long, and anytime I've decided to lower my risk reward from 2 to 1, or at least 1.5 R to 1, it's just so much work and not that much cash, unless you're trading with enormous sizes. And even then, I find it very labor intensive. It's a lot of trading, a lot of work, and then at the end of the day, you look at your profit curve, you look at the amount of commissions that you paid, and it's just like meh. So initially I was a swing trader, so naturally I gravitated towards some sort of an intraday swing way of doing things. However, I will run my trades anywhere from 10 minutes up to 2 to 3 hours, depending on the opportunity and the day type and all of that. So yeah, the first step is that on the failed auction trade, you need to have enough of the initial balance range in order to run that trade. For myself, I use 35 ticks, sometimes even more if we have the expanded volatility. So 35 ticks for a stop loss, aiming to get 50 to 70 ticks profit. Now, obviously, those are not going to come every day. They're not even going to come very early in the day. So naturally, I am pretty selective over when I trade, and especially for London, since we don't have the European futures yet, I'm very, very careful not to do stupid trades that lead nowhere. Or even if I do a trade, I will do it for very small size, like 2 to 3 micros, and then I will decide whether there's a big opportunity later on in the day when my true edge is present for crude oil. I do have a big edge about 2.5 hours into London for DAX, but as we know, we don't have DAX yet, so that's going to have to wait. One way to figure out whether there is an opportunity is to look at the volatility index on the CME. And I've got to warn people because we are sitting in some lower volatility. Now, WTI crude oil, whenever it falls below 35, let me see if you guys can see that, yeah. Whenever it falls below 35 OVX, which is its own VIX, that means that the moves are not going to be great. So you're going to have a lot of fake outs or moves without follow through. So it kind of starts and then stops and then starts and then stops. So really, I want to see crude oil floating around 38, 39, maybe 36 as that cutoff point before I start to look for any sort of momentum trades. Now, if we look at metals, which is something I also trade quite heavily, we've had a massive reduction in volatility across the board. The only one that is still kicking around is platinum. Now for platinum, I do like to see it above 25, and we are just on the cusp at 25.6. With the trend kind of turning slightly bigger. So I am going to be looking at platinum today too. All of the other ones, copper, silver, gold, the volatility index has fallen very to some very suspicious levels where you're not going to get very good moves. So I'm probably not going to be trading that until we pick up. We're coming into the time of the year when we have Christmas, we have holidays, we have a whole bunch of stuff happening, and the volatility indexes can be a very good way to figure out whether you should be trading momentum trades or not. It's not like that they can never happen, because you can always have once in a blue moon day that just goes crazy because of some risk off, risk on event. But for the most part, this can be a very, very good way to figure out if that breakout in platinum is really something you should be getting involved with, or a breakout in copper. You know, copper gave us beautiful, beautiful moves. But if I show you the actual volatility index before basically about 2-3 weeks ago, you will see that it was actually floating around 25, 27. So all throughout October and the end of September, it was increasing. And then it stayed above 20, 25, 26, 20, 27. It stayed until such time that about 2-3 weeks ago when we had that drop. And you can see it here. And since then, copper has been largely range bound. So, you know, take a look at the volatility indexes. They're a very, very good way to figure things out. And another thing with crude oil, especially the OVX. Whenever you have OVX rising suddenly intraday, and you can look at these intraday too, it usually means some kind of a risk-off event, unless you have the inventories or something. But outside of the inventories, you can have crude oil that's effectively, sorry, my hair is all in my face. Crude oil that is effectively reacting to something, some kind of news, usually from wars or Middle East or something that might impact the supply and demand of crude oil. Now, what's interesting about that is that you can actually have the OVX rising, but then equity starting to go nuts as well. So it can be a good indicator of risk off, risk on day, where you maybe were in a quiet day, nothing's really happening in NASDAQ, and then OVX starts rising. You can actually use that as a pretty good correlating factor to maybe run that momentum trade that you were stalking all day, but the moves are just not coming. So that's something to keep in mind. There are correlations between these products that can be used generally to run momentums versus scalps, and to decide which one should be the most appropriate strategy for that particular time of day and that particular sentiment. Yarden says, can you use the failed/sustained auction in every section for every instrument? For example, you can use the ES in the London session. Yeah, well, this comes back to what I was just saying, right? So ES just generally doesn't have London as its main session. So it's technically an out-of-hours session. And what happens with the out-of-hours movements? Well, most of the time they will be just meh. They're not really going to bring massive movement unless you have something going on with risk off, risk on. So one way to do that is if something's breaking out, have a look at its own VIX. Is it rising? Is there a cutoff point where you're deeming that the OVX is, not the OVX, the VIX of ES, volatility index, is actually rising? And then have a look at financial juice to see whether something else might be happening to push it along. Because if there's nothing to push it along, likelihood is you're just going to end up in either a failed auction or a neutral day or some kind of a very, very slow day that doesn't really do anything, and then you're just stuck in a trade watching paint dry. But yes, technically, if you're applying the same idea to products that trade for that session, like let's say DAX is London, right? DAX uses London as its main session. Well, Eurex really, but Eurex is a small exchange. So effectively, when London kicks off, a lot of people trade DAX on it as well, and the whole volume just picks up. So when you see a breakout in DAX during London, is that actually valid? Yes, that's going to be completely valid. But if you see ES having a tiny little initial balance and then trying to break out, should we take that as a momentum trade? Probably not. Maybe once you're already pre-market and you see the volume increasing, there are uses for volume that are outside of, going super deep into it just to see whether there is volume behind it. If there's no volume behind it, likelihood is it's just a fake out. And maybe you can do like a scalpy failed auction type trade. But generally, I try not to do breakout trades out of hours for the out of hours products. And I will always err on the side of doing a fake out trade. So if we get outside and I'm like, well, let's try a reversal trade, because for the most part, over the last 17 years, whenever I try doing a momentum trade out of hours, it won't work. So I have a pretty large sample size just from experiential data that sort of approach. It doesn't have the time-tested thing, right? It doesn't have time on its side. It's not a positive expectancy trade. It's a once-in-a-blue-moon outlier, right? So you need to know whether you're trading an outlier or whether it's the norm. Like I said, there are times when headline risk will bring breakout stuff, but you have to ensure that the breakout has some juice behind it. How do I get the red horizontal lines on the charts? You draw them. So I use obviously my Blatek indicators on my other platform, but I also use MentorQ for the options levels. These are not automatically generated. I know that Topstep are working on the TPOs, so we might be able to get these value areas and the initial balances at some point, but we still don't have them. This is why I see many of us rely on our other charting platforms that we've used for many years. Personally, I use Topstep as my main execution platform. But since I've been trading for so long, I use everything, right? I use Ninja, I've used Quantower, I've used MetaTrader 5, I've used Topstep, I've used Bloomberg Terminal, like you name it, I probably used it, right? So it's just a matter of personal preference. But if you want to draw the lines, it's literally just you grab a line, horizontal, plop it on the chart, name it, blah. And there it is. Blah line, yeah. So yeah, they're not automatically generated. I do this before we start every morning. So I go to my various platforms and I drag out the data points that I'm interested in. So one thing I wanted to point out with this particular product, crude oil, is that today we have a lot of levels that are close together. Now, until we shake out some of those, we're probably going to be stuck in between sort of like GEX1, GEX3, and these HVLs and Call levels. So I'm not too keen on trading crude oil today, unless, obviously I get my failed auction later on, closer to the euro close and after the forex options have expired. Maybe we're going to get something. But until that happens, I'm not very keen on trading anything that has so many levels close by. I want to see a nice distance where we have some sort of a price acting as a magnet, but here we have a lot of speed bumps. You try and go up, it's like it's an HVL. You try and go up, or it's an initial balance high. You try and go up, or it's value high, and then you go higher up. Oh, we have some calls laying there. It's like great. So that makes for a very painful movement, and I'm gonna guess we're probably gonna be range bound today. At least until NYMEX. And then maybe, like I said, we might get some shakeouts and they might decide to make a move one way or the other. Aaron Sharma says, how do you use the GEX levels and are you updating them multiple times a day? For now, I'm only updating them once a day. And so to a degree that is lagging data. However, Mental Q have just come up with the intraday levels. I'm not sure they're doing them for for crude oil futures. Excuse me. But I do know they do them for equities. I think 6 times a day they have snapshots. I think they might have it for USO or something like that, which would be maybe a better choice. But yeah, I'm going to explore the intraday side of things for alternative markets at a later date. For now, I'm still just using them as a snapshot of once a day and then using some of my other levels to make a decision what we should be doing around them. But do know, like for example, something like platinum. Whenever I look at platinum and I track it throughout the week, the levels that are in the options data don't really change that drastically. So while something that's quite liquid and very fast I can queue, it might change the gamma flows really quickly intraday. That's probably still not going to be the case in platinum, crude oil, copper. They are much slower moving products, okay? So I do think it would be maybe a little bit overkill to kind of do it multiple times a day and then just find that there's not much change. And even through the whole week, there's not that much change, right? Sometimes if the contracts are rolling or we've reached brand new levels, yes, there will be a change the next day. But for the most part, for example, 70 has been a core resistance for like 2 weeks now. Like that's just stayed there as a level of interest. And 68.50 also many weeks. If we go back, let's go 4 hours. I get a little bit more data. 68.50 has been like a pivotal area now. Like look at how many times. This is 19th of November. So 68.50 acts as a support. 68.50 again support. 68.50, and then we go down and we start pivoting. This is like 4 hours, right? So we start pivoting around 68.50 to the upside. Then again, we try to smash it, and then it's just stayed there as a level of interest, right? Now, obviously, if you want to go down the rabbit hole of of intraday gamma flows, yeah, you can do that, but there is such a thing as information overload, so just be careful, especially if you're newer to the options chains and levels. I've done pretty well with just once a day snapshot, but yeah, so depends on what you're trading, right? If you're trading NQ or actually one instance where that would be useful is like, for example, if you've had some levels at the beginning of the day and then we go into a mad trending move that just keeps going. That is when you want to do another snapshot to see what sort of a change we've had in the gamma flows, because it's going to give you new reference points. But for the most part, if you have a normal regular day, it's going to be a bit overkill. And for now, we have a normal regular day. It's just, we're doing the same thing now of barely 17 ticks. Like Friday was pretty lively on the ES and NQ, but this Monday, There's some movement, but this whole movement, let's see, Asia. Yeah, so for now we're in a typical sort of out of hours nothingness. There's movement, there's random walk, obviously, but it's not really anything that I would be getting involved in. So look at DAX. I mean, even DAX is kind of trying to go higher, but it's not really. It's looking choppy, right? It's looking very choppy. So let me maybe show you what's going on there. DAX followed. They followed what was going on Friday. So if I go back in time, so this was London. So they went up. A little bit of pre-market sell-off, so there's some profit taking. And then we open up above value and immediately started going up. Overshot the ADR and ASR and eventually settled at new price levels, right? So that would have been maybe the day to do an intraday snapshot. Now, what I do with DAX in particular is to convert either ES or SPX levels, depends on what looks better, and then use the options data from that. You can find like DAX options, but I don't think they have that much volume. And I do something similar for RBOB as well. Now, if you look at the London session versus ES, they're kind of looking opposite right now. Like ES is not doing anything, whereas this one is trying to break out, but look at how it's doing it. Down, up, down, up. Like that's a weak price action. I don't want to be trading that. So unless we get some very kind of committed movement, and also DAX has their own VIX. So it's let's have a look at that. I want it to be over 17. For the good moves, where are we? We're at 14.6. So that's also under the volatility that I want to see on DAX in order to get really great moves, which leaves me to wait for a better trade location and to just see whether we get some sort of a fade somewhere. And because it's an equity index, I would like that to be a long, so some sort of a sell-off. If I don't get that, I'm just going to stay out. Very simple. Right, let's have a look at some more questions. Do I use Paul H? Good morning, Paul. Always good to see you here. Dee, do you use market profile on the daily to decide if it's a normal day? I don't use it on the daily. No, I exclusively use it RTH, so regular trading hours only. If I'm going to use the daily chart, I will use a combination of supply and demand, just pure price, and volume profile, just to make sure that we have some trend. On crude oil right now, we have nothing, right? We're in a very thick volume node. But if we go down to analyze the actual swing and how we got there, you can see there's a supply up here. And then there's a demand that we're trying to bounce from down here, but it's massive. So that's not really helping us, right? If you're in a range bound situation, which they say is, this is not going to help much. But you don't want to be smushing the same sort of same concepts and then applying them the way they shouldn't be applied. So for me, I know that there's a way to smush profiles together, but again, it sort of brings you into a situation of the volume profile. There's not enough resolution in there. Whereas when you're on an intraday time frame, you have the initial balance. And I've actually spoken to Hogue like many years ago about this. We have the initial balance, we have, single prints, we have so many other concepts that are clearly defined on an intraday regular trading hours level. How do you define the initial balance for the week? The first day, first 2 hours, first 4 hours, first session? Like, what would be the initial balance on the daily and weekly level? And nobody knows that. Like even in the books, you know, he doesn't talk about that. He just talks about combining things maybe for the purposes of seeing whether there's single prints. And for me, I can see that, right? I don't need anything to show me that there's no single prints or that there are. So I don't know. To me, that would be an overkill. I think it was maybe made to try and do everything via market profile, and you know, maybe it's a branding thing for them. I don't know, but for me, market profile is an RTH concept. If you're gonna look at other things, look at volume profile or supply and demand. That's worked much better for me. So yeah. Aaron says, this is awesome. Thank you for the tuition. I just don't always write in here. Well, you know, while we're waiting for setups and stuff, that's always a good thing. We want to learn stuff. To be honest, I learn things every day still, right? Even from people who are coming on Topstep and they're like, okay, well, this is how I trade. Very frequently, you might pick something up, right? Just because somebody has been trading less than you, it doesn't mean that they might have not worked out something that you haven't. So you have to always be open. I don't know everything. I know a lot, but I don't know everything, right? And I'm always open to adjusting and tweaking and learning. That is why I still do this. You know, it's an endless game of self-improvement, and that is what keeps me coming back after all of these years, right? I see Patrick from Mental Q is here. Yeah. Well, if you guys haven't seen this, I've got to say it was such a great session. Go to Mental Q website and sorry, not website, YouTube channel and website. You will see myself, Patrick, and Anne-Marie. We had a great webinar, and actually Patrick dropped some real gems during that session. So check it out. It was on Friday. We talked about risk management. We talked about how we use the levels. We talk about how Patrick uses the stops on using the GEX levels as well. It's so good, guys. You've got to check it out. It was very, very enjoyable. Trader Fader TSTV says, do some impressions again. Yeah, I sometimes do the impressions. Yes, that's right. That's because I'm a musician and I find impressions pretty funny, and I like doing impressions, you know. I like doing the wow, wow, wow quite a bit. And you will notice that in some of my older videos, I have a totally different accent. I don't know what's up with that, but whenever I'm around other people, I will take on their accents after a while. That's very odd. And then people think that I'm joking. And I'm like, no, this is something that just happens to me. And also, like, geographically, you put me anywhere, like when I went to Scotland for like 2 weeks, I came back sounding slightly Scottish. Why? Daenerys, whatever that character is. What was the gray wave-like indicator behind the candles? The gray wave-like. Oh yeah, those are the volatility bands. So I do them with. You can put them on here. I'm pretty sure actually. Volatility bands, standard deviation bands, but they are calculated with DAX. Sorry, not with DAX, with VWAP. Let me just see whether we can do that. Okay, so you can't do them on that, but there should be standard deviation bands. Did that do it? No, those are no bands. So again, I don't use this as my kind of core platform, but there is a way to put VWAP and then standard deviation bands that will kind of show you how far we're moving away from the mean. Yeah, so so yeah, I'm not sure exactly where they are on TSTX. Let me try and think for a second. Yeah, I gotta love the trolls on a Monday morning. Dude, that guy, Trader Fader, you're probably still watching. Just go and, like, touch some grass, man. But I love you. I still love you. Don't worry. There are people in the world that they will accept you for who you are. So let's try, maybe, let's see. Volatility. Index, no. What could that be under? I'm pretty sure that Anne-Marie showed how to do it, and I'm just like, standard error bands? Right, what's an error band? What is an error band? Is that it? I think that would probably be more like Bollinger Bands to it looks more. I mean, you could use Bollinger Bands, but the problem that I have with it is that it's only calculated by the moving average. It's not VWAP, and we really want, VWAP. So I don't know. I'm gonna ask Robert Cooney because he's the wizard of Topstep how to do it, and then we can show it to you at some other time. Obviously, on my other platform, I do have it just standard as a part of VWAP. So if I go and just grab it in here, you can just go standard deviation, and we even have like different ways that we've calculated it. So you can just select whichever one you like. And interestingly, Sierra Chart seems to have a pretty good solution for that. So we use Sierra calculation for the volatility bands as a default. So hopefully that helps. Right, crude oil is trying to poke towards the initial bounce high, but again, immediately sellers are stepping in. Okay, so question, how do you feel about platinum? I haven't actually looked at platinum just yet. I had a very nice sort of 3 days off, 4 days off doing very little. Apart from that one crude oil trade and the webinar on Friday, I did nothing the entire weekend. Well, I had to take one of my dogs to the vet, but that's like almost normal because my dogs are like, oh, hey, it's Saturday. Should we start limping, choking, or yelping? And of course, Saturday, it turns out that she tweaked her hip somehow playing with her mom. And then she felt very sorry for herself. But apart from that, I literally spent the weekend not looking at charts, not doing anything, just completely resting my brain from everything. But let's have a look at platinum, see what's going on in there. Let's utilize one of these. I still haven't put any levels on platinum. Let's have a look. Right now we're sitting right at VWAP, so that means that we haven't really moved that far, or even if we tried, we came right back to it. That's not really bringing me that much interest, but let's see what our levels say. Let me just drag out some data here. Okay. Yeah, for now it just seems to be stuck in a range a little bit. Let me look at my profiles. God, how many charts have I got open here? Like a million. Let's see. I'm just gonna see where my platinum is. It seems to have been lost. Oh, here we go. Excuse me for just 1 minute. I keep keep coughing for some reason. Here we go. Let's have a look. So platinum is trying to break out, doing a bit of a rally-based rally, but the value area from Friday was very, very small, so that's not a good indicator. There is a chance that this gets to 950 before doing anything else. But really, for me, I think I'm going to wait for a little bit later in the day. We have plenty of space up to the average daily ranges. They're so far away. They're like 957, 960. Anything in between. So one of the things that I like to do as well, I don't like to get involved in the middle of a middle, right? So if we are turning around from, let's say, an ADR low or average session range low, and then we're catching it there, anything in the middle is really quite iffy for me. And unless you're going to do a really quick move like from NQ or something, that would make sense to just in and out, breakout trade, grab like 50 points and get out. If you're looking at the style that I have, just trading with basically looking for longer time frame levels and looking for the opportunities that could last me for 2 hours, not like 2 seconds, like some YouTubers out there that do like a 10-second trade and that's like the biggest trade of their life. To me, it means that they're not, like some of them are pretty good, like Rips is excellent, and I know that he looks at larger time frames and he has a whole picture in mind, but a lot of the people that I see on YouTube, they can't hold on to a trade for dear life, otherwise they will get stopped out. Why? Because it's a wrong trade location for that sort of a longer time frame hold. What I've worked very hard on in my career is to get that good trading location, and I was excellent at that as a swing trader. I remain excellent in that, and that is where my strength is, right? Getting the right trade location for the type of a trade that will bring me at least 2, 3, 4 R, sometimes even 6 R. Like some of the trades where I take 3 R, they carry on, right? They don't happen every day, but they carry on. They're massively large opportunities. Now, we have the time constraint, obviously, so you have to find like a middle ground between what is a good risk reward versus a decent stop loss that can happen in the regular trading hour session so that you don't have to bank on extra time. And that's a very fine line to walk on. So, you know, I have like medium accuracy, medium risk reward. So that's like 43 to 45% when we look at like years of trading, like very long sample sizes, not looking at an isolated 1 week, 2 weeks. No, looking at what you've done over the last year, 2 years, 3 years. Now, if that accuracy is anywhere sub 30% and your risk reward is still 1.1, that, my friend, means that you don't have a good system design, or that you're doing something outside of the plan, going on tilt too much, and you're effectively just not really following the numbers combinations that work long term. Okay. Now, the extremes of that equation are people like Dakota and Rafa that have quite low accuracy, but they always bank on very large risk reward of 5, 6, 7, 9 R, 10 R in order to account for that. But those kind of systems generally tend to be more stable over time, but they're more difficult to follow. Why? Because it's not easy to get up, loss. You're losing effectively 7 out of 10 trades, right? Not many people have emotional resilience to do that. Now, I have emotional resilience, but I can't trade with 30% accuracy. However, what I can do is trade with the 43, 45 to 50% accuracy. I'm absolutely fine with that. So you have to find what works for you. It's going to be very different. I'm guessing that a lot of momentum traders who like the higher accuracy, they are people who expect instant gratification a lot more, and they get psychologically bothered when they don't get that. I don't have a problem with that, right? I'm perfectly fine being wrong, and I'm perfectly fine not being, not getting the 2R and still getting maybe 1R but not taking profits and then taking a scratch trade. I'm absolutely fine doing that. I have no problem being scratch if my trade doesn't go to 2R at least. But again, matter of personal preference, right? I look at the P&L curve. I look at the net amount of ticks that I get. And almost always, well, actually always, for me, it was a better choice when I avoided one-to-one opportunities and only went for the opportunities that inherently offered 3R immediately, so that I can take it off earlier, right? I can take it off at 1.7, 2R, 2.3, and that is for me the best outcome, because that means I don't have to have crazy high accuracy and I can be wrong a lot, but still I make a decent amount. So, that's something that resonates with me. I think that's something probably that comes after years and years of understanding that as you age as well, as you age, you are effectively doing a lot of work, and yet your brain will start to slow down. A lot of the YouTubers you see, they're very, very young, okay? They are, 32, they're 35, 36, even if they look like a car crash at 36, but they are still very young people, right? Their brains are still able to operate pretty fast, but you get over 40, you're 45, 50, that will start to slow down. We have Coach Jack. He's actually 83, I think. He's JD's dad, right? He's 83. He still trades. What does he trade? He trades corn and agros. Now, they're very slow, right? There's a reason for that. I've moved from trading, I traded NASDAQ like 4 years ago. I still traded NASDAQ. I find it painful these days. I just can't do it. But yeah, crude oil has slowed down, but crude oil can be bloody crazy as well. However, crude oil can be painfully slow this year as well. So what do? Well, I went to RBOB. Now, I still find RBOB gasoline futures a little bit too fast for me on some days. However, I tend to trade it towards the end of the day, and everything is less volume, less crazy. So usually I just do my end of day fade if it presents itself, and I'm done. So that is less labor intensive for me. But you've noticed that I've moved to instruments that are much slower, copper, platinum, there's a reason for that. So you also have to pay attention to what your personality is doing and how quickly you are able to react without emotional involvement. Whenever that starts to cause trouble, whenever you start to get too many emotions floating up as you're losing a trade or something, take a look at trading something else. Go to ES, go to YM, go to, RTY if you're an equities trader. And if you still find that all of those are too volatile for you, take a look at the alternative markets. Maybe your brain is not able to cope with all the stuff that's being thrown at it. There are not many people in the world that can just scalp all day long and remain profitable, right? You can have people who are partially profitable scalping, but almost always they will have, 2 great weeks and then a complete car crash the next week. That's not what I aim for, right? I aim for general stability And even if I'm in a drawdown, my drawdowns are usually like slow bleed over a length of time, primarily because there's something that changed in the markets. And yes, it can throw me off. However, generally, I've been through drawdowns before. It's just like, yeah, whatever. You either move product that you've traded before, not a brand new product, but you either do that or you just wait it out. You just wait, you go back on combines, you do something to remove risk from whatever's happening, but you also do research, right? So the volatility side of things is actually quite helpful, because if you find that you're underperforming because there's no movement, like that's actually something to really spend some time on. You enter a trade, but nothing's moving. Or you enter a trade, it goes against you. You flip to the other side, it goes against you. And that keeps happening day after day. You're likely in a range-bound market, okay? And what you're doing is that you're chasing momentum trades. Almost always on days like that, it's going to feel like everything is going against you. Whatever you do, nothing feels right. And every time that happens to me, after a couple of trades, if I've tried flipping and both of them go against me, I'll be like, probably range-bound day. And then I get my paws off the mouse and I wait for better trade locations, right? However, looking at volatility indexes can actually help you decide whether a momentum trade is the right call or not. And if not, you either have to get better at range trading, or you move to another instrument. That if you've had enough years of experience, you traded 3, 4 years, 5 years, spend some time on an instrument that catches your eye and that you're like, oh, actually, this looks all right. But just don't trade them in the accounts immediately live, in the accounts that matter, like XFAs, live funded. Go to combines, test it out for a month or so. If it's still working, that's the time to go into the accounts that matter, right? Just don't add new stuff willy-nilly. Paul H says, I do the same with my accents. My family's a Geordies, and I adopt that accent after 3 days with them. I think it's a musician thing. Yeah. All right. We have a few more minutes. I mean, for now, it's a bit of a muted day. Platinum is trying to get to that 950 level, but it's still not there, guys. It's like, come on, 20 points, really? Let's see what copper is doing. But copper volatility has gone down massively, so I don't have high hopes there either. Let's have a look. There it is. I mean, copper has moved today. That's interesting. Did we roll? We did roll, didn't we? Huh. Let's have a look at copper. Copper looks... And where are we? HGH. Okay. HGH, human growth hormone. We grow. Yeah, copper, it did go on a run today. So we are away from overnight VWAP. That's good. Let's see what the intraday volatility is doing. Intraday. Let's move this over. What am I doing? Okay. Now let's have a look at 6 hours volatility. Interesting. So, I mean, apparently it's still dropping, right? But it is a bit delayed because I'm not, this is just a free thing. So it's possible that this kicked up in the last few hours. But for now, all I'm seeing is just floating around 20. I mean, do we have anything on the inflation data this week? Let's have a look. Yeah, the PMI today. It's not something that would terribly affect copper. Yeah, so we have jolts later. Yeah, so I mean, I suppose we're gonna have unemployment claims as well. That generally economy stuff can impact copper, but one caveat is that we did roll into a new contract. So what we're seeing here is probably just people who are doing the switch orders. They're basically going into the new contracts, new rolling over into the front month. That can bring these sort of moves. So the trending move. But let's have a look at what's going on with options data so you can rely on something later on in the day. What is the current ticker? It's HGH. I'm going to be laughing about that all along. HGH. We're going to be trading the human growth hormone this month. All right, let's see. Okay, we have some high volume level down at 410. And then some GEX levels of interest at 415 and 417. And then my ADR and ASR are literally around here already. So for all intents and purposes, we have already exhausted the day's range. But since we had a very quiet period over the last several weeks, you can see we're just like bouncing in between. It tried to get out. We're back in there. Technically, this could mean a short, right? Because we've tried to go down. This is way too much of a wick to just kind of continue. Let me see where the New York values are located, because that's going to be more pertinent to you guys. So I'm going to look at COMEX value areas since, I'm going to be ending this stream here. So 413.50 is the COMEX value. $13.50. Then the COMEX value high is 414.50. So pretty small. And if I go down to a 5-minute chart, we can now see that we have a whole bunch of stuff happening here. If we manage to get into the value area and then we open COMEX inside it, that's going to change the outlook because it means that we might just not really go anywhere. If we manage to stay below it, below the value of COMEX from Friday, you might look for a reversal from value. There is a chance that we kind of just wag around some of these GEX levels between 414 and 415. In which case, I might look for a pullback and a further upside move. So there are choices in copper today. Might look at copper for post NY cut, which is after 9 a.m. Central. That's after 3 p.m. UK time, for those of you who are in the UK. And you can get some really nice reversal trades, even in copper, in and around about that time of day. But yeah, so copper might be the choice. It's a new front month. They do seem to be interested in taking it higher for now. But yeah. definitely an interesting product for today. Platinum is also interesting, but for now I don't have levels that are that great. So I need to wait until we reach some better areas for my style of trading. Another question from Paul. I know the rollover is important to know about. Topstep X is always in the front running contract. So does it affect in our trading Topstep? Is it just cash account stuff? No, so you will get affected. There was a bug for a long time in Topstep X where they would roll the contracts super quickly. And then you would have all the other platforms staying on the old contract. But because we sort of rolled with a little bit more volume, Topstep X would be rolling. And then we also had the period of time when it wasn't rolling for 3 days after the new contract roll. And that was because they were focusing mainly on equities traders. Now, in equities, you only roll once every quarter. But in commodities, we roll every month, a lot of the times. Crude oil, nearly every single month we will roll, right? And that's, you know, it was very tricky when we were still in beta, because, you know, I will be seeing a setup and I can't take it because we're still not, like, we haven't rolled and there's no volume in the old contract. Or sorry, there's no there was one time when they rolled our bob into the new contract and there was nobody trading it. So, and I didn't look at the symbol, so I entered a trade and it was just a one lot. It suddenly started wagging by like plus 1.800, like 1,800, minus 1.800, plus 1. And I was like, oh no, I'm the only one trading this. That's great. I'm just wagging around in wrong contract spreads. So I immediately killed that trade. Luckily, there was no loss or anything. But yeah, it was scary. So it does affect it. They sorted it out over the last sort of 3 months. But it's always prudent to check what contract the platform has, not just Topstep X, but in general, and what contract is actually the front month. Until the rollover finishes, it's generally not a great idea to look for trading, because you're going to get stuck in paper cuts, you're going to get stuck in watching paint dry, nothing moving. You know, even if you look at this contract, look at how non-committal this was. This is a 5-minute chart. Like, there's nothing. So this was overnight, and then you go last week. Look at how painful this move looks. It's like it's going down, but it's just constantly contained in my little 9 EMA ribbon. It's horrible. And then it gets a fake out. So it's like, are we turning around? No, we're not. Are we turning around? No. Are we, like, that's such dangerous market conditions. And if you're unaware of that, it's extraordinarily difficult to trade it. Now, I'm trying to go before the 28th of November as well, because that was pretty slow. I avoided copper for about a week now. Let's go back. Now this is the 5-minute chart. So here we go. All very spiky. So tries to move, then nothing. Fake out, then another fake out, and then sort of moves, then nothing. Yeah, you don't want to see that. You want to see nice moves that if you're going to do a sustained auction, right? If you're doing like range bound days, yeah, that can be great. But I would classify myself more as a mean reversion trader. You know, I'm not a breakout trader. I'm not a momentum trader. My core strength lies in mean reversions. I love them, and I'm very good at sifting through when is the time for a mean reversion. All right, guys, unless we have more questions, I think we're going to finish it up here. Hannah says, grabbed copper at the bottom and sold much too early. Damn. Well, let's have a look at what sort of a type of a day they gave us. But I think they pretty much gave us, yeah, I mean, it was a pretty easy, without spending too much time here. So this is your initial balance, goes above VWAP into a sustained auction and carries on. So if you grabbed it at the bottom, was there anything there? Yeah, look, there was the average daily range low. So if you were looking at that, if you knew there was an average daily range low from 24 hours, you could have waited for this to happen and then held it all the way through. So profile enables you to see things that you otherwise wouldn't. It removes guesswork from the whole equation, right? It removes that whole, oh, should I hold it? It's like, well, if it's above the initial balance and you've caught it from the bottom and you have a sustained auction with single prints that were left behind and it also goes overnight VWAP to hold above it, that's a hold. You just don't touch. You know, step away from the mouse, go do something else and let the high risk reward trade play out. If it starts to fall back, well, since you caught it at the bottom at average daily range low, you have space, you have time to decide. So that's what it did for me, right? It did offer me a way to look at the markets in a very, very objective way and to tell me when I'm wrong, when I should be, you know, bailing. All right, guys, that is it for today. Let me just see if I've got any plugs. Do I even have that open? We're going to be doing more VIPs in January for sure. So keep your eyes peeled during the main broadcast. They're going to be dropping the link for you guys to start signing up. The more times that you sign up, the better your chances are to get into the VIP. And let me just get those notes up. Okay, I think that's it for now. I do believe Nick Fortick is back. He had his baby and he is back doing his Sunday market kickoff. So check him out on Sundays. It's a great segment because he looks at the larger time frame and he gives you the outlook of the levels that he's looking at. Very, very useful. Obviously catch Dakota for slow markets and catch Jay and Coach Paul for At the Buzzer. That's always a good segment for the recap. Something you should be doing as well every time we get through the day and whatever the day was, however you did. It's always good to go back and go, well, what sort of the move did we have? Like, what was the setup? Was it the urgency trade? Was it a failed auction? Did I manage to take advantage of that? And if not, why not? That will do so much for your own experiential data and to keep your skills growing more and more. So do check out all of those segments. I will see you guys again tomorrow. I don't think I'm going to be on the main broadcast. It is my birthday week, so I do have some plans for the week, but I am going to be here Monday through Thursday as usual. And with that, I'm going to sign off. Have a great day. Trade safe. Make sure you're taking it slow on this Monday morning. If necessary, use the partial lockout feature, which is absolutely awesome. I absolutely love it. And let's keep growing together. You know, let's look to the end of the year and how we can keep growing into the next year. I'm Deeyana Angelo. This was the London session on TopstepTV. Until tomorrow, take care.